According to analysts, Nigeria's local real estate market was negatively impacted in 2012 by CBN's tightening measures. Now, as a result, the sector has been seeing an oversupply of real estate assets in mainly land and residential property, and a stagnation in the development of new stock, leading to a weakening in pricing. Now, joining me in the studio to take apart the real estate sector is Yomi Sanya. He's an MD with Goldbanc Management Associates. Great to have you in the studio with me today. Let's talk about the real estate sector in Nigeria now. In Q3, we were talking about an oversupply of real estate assets in land and residential. We're talking about a weakening in pricing. Is that still the case, especially going into Q4 2012 and now as we've just began the year?
Right, thank you very much for inviting me to this program. Again, good morning. Straight to the point, what we witnessed in 2012 certainly is not what we're going to get into in 2013. Reason being that most of the things we're going to be seeing now on will be more of ideas, new products in that area from the secondary point of view. When I say secondary point of view, I'm talking about the secondary mortgage structure being robust at this time. And therefore, we're going to be seeing a lot of new products taking up those vacancies you talked about right now in your intro, taking part in some of these sales that ordinarily have not occurred. And I'm so sure in the first quarter of this year, probably one of the biggest investment banks will be listing another real estate investment trust. That again will bring in quite a lot of money into that market, whereby you have all kind of good possession going on. I think that's what I foresee that will happen.
So definitely a positive outlook there.
Yes.
But I mean, you talked about a lot we're going to see in the secondary mortgage market.
Yeah.
And I mean, the mortgage market in Nigeria, you know, it's a market
absent.
Yes, it's absent. Right. So I mean, I'd love to get your take. You said that we'll see a robust secondary mortgage market being established this year. Right. Can you talk to us a bit about maybe some of the government reforms that we've seen in this area, you know, and, you know, also in telling Nigerians that there's this mortgage market they can access funds from, you know, what are we going to see this year? Interestingly,
yes, we're going to see quite a lot of secondary mortgage activity happening this year. Part of what has happened is that the Federal Ministry of Finance has actually taken the bull by the horn in that respect. What do I mean? There's a liquidity facilitator company that is coming up. It's a private initiative, and the federal government of finance, particularly the coordinating minister, has actually been in the forefront and driving this process. Coupled with the fact that we have a federal mortgage bank that has also settled in to understand the secondary mortgage and their responsibility, just like you have the Fannie Mae, the Ginnie Mae, and the Freddie Mac in the U.S. Now, you have quite a lot of products which will refinance some of the primary mortgages that were created, which ordinarily we don't have before. So that, in essence, we will bring to the fore individuals who can also have a property through the mortgage process. And what has been delaying that in the past is when you don't have a secondary mortgage market structure in place.
Right. But I mean, banks, another major source of funding when it comes to the real estate market. And I remember we talked last year about the fact that, you know, they are reluctant to lend with the whole non-performing loans debacle from 2008. Lending is just there, and cost of lending is also a major issue. Right. How do you think this bears this year? Do you think that we're going to see banks, you know, more open to lending to the real estate sector? Banks as a source of funding.
Yeah.
Are they really a source of funding?
Correct. Yeah. You see, the banks generally supposed to create the short-term end of the funding. And what you have had in the past is the short-term fund are the ones chasing the long-term nature of the real estate. But when I talked about the secondary mortgage market, right, the secondary mortgage market would take over from where the banks have actually lent, all right? And that's the secondary market will create a long-term facility for the market. Thereby, yes, the banks can actually, extend money in the short-term form, whereas you'll be taking over from there on the secondary mortgage structure, whereby you can actually sell that into the marketplace. That's what we're talking about, which was absent. That way, it will also bring down the interest cost for the mortgagor in such a way that you have a long-term tenor.
Right.
And that's why we're saying the capital market is so flexible this year.
I was just going to ask that. I mean, what role do you think the capital market will play?
That's the major role for the capital market, really. Because when we talk about the secondary market mortgages, what we find is that the mortgages that have been created will be refinanced through the capital market. And we have quite a lot of funds in the capital market. I mean, coming from the point of view of the pension funds, I understand we have about 3 trillion in pension assets, and yet the absence of the types of real estate investment trust is not there. The residential mortgage-backed securities are not there. All of those ones will come in, and those are the means and methods by which you refinance all this long-term fund. That's what I mean, that the secondary mortgage market will come into existence. And once we have that, I think the year is set to go for the real estate sector.
Right. And I mean, what's your take in terms of pricing as well? We saw weakening in pricing last year. And one thing about Nigeria's real estate sector, especially Lagos, is that, pricing is extremely high. They said we saw a weakening in high-end real estate and land pricing last year. What's your take in terms of pricing? What are we going to see this year?
In terms of pricing, I must be honest with you. It's going to take a scientific format this year, unlike before. Why you have those distortions? It's that you don't have a scientific pricing as it were. What has happened really is that you use the rule of the thumb to actually tell, or you use the supply and demand and all of that, and there's nothing scientific in all the pricing that we have in place. However, what we are likely to have now is that there is going to be a correction, of what the prices should be. You will have a correction in such a way that the rental values will actually determine what the price of a whole house should be. Because what you find is that when you even use the method of bricks and blocks and what have you to calculate the value of a house, people don't go for the rental values and all of that. But all of those will come into play now for you to determine what a value of a property should be, what the rent value in certain areas should be. And that, I think, will come a long way to actually correct the market.
Prices. So we're going to see a correction of the prices this year.